This is a buy signal as indicated by this indicator. If we were to take a long position here, well, you can see that that trade would have been profitable. How about this? This was a sell signal. If we were to take a short position, the trade would have been profitable. Now, even without any extra confirmation indicators, well, this tool is pretty decent. In this video, we're gonna go over what this indicator is and how we can combine it with other indicators to craft a strategy out of it. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, to add this indicator to your chart, you want to go to TradingView and then open any trading security that you like in any time frame. For me, I'm going to be using the 1 hour time frame of GBP JPY. And then you want to click on indicators and type in 2-pole oscillator. And it's going to be this one by Big Beluga. Now, the 2-pole oscillator is a refined momentum and trend strength indicator that enhances traditional oscillators by smoothing out price deviations using a 2-pole filter. In simple terms, it's designed to offer cleaner signals, reduced noise, and actionable insights that can actually be helpful in your trading. This indicator is made up of the following components. First of all, you want to double-click on it, and then on the Style tab, you want to activate the last plot option. As you can see, that activates a thin blue line known as the signal line. Next to the signal line, we have the oscillator, which changes color between purple and blue. Looking at the indicator closely, you can see that the signal line and the oscillator crisscross each other every now and then. Every time the oscillator crosses above the signal line, a buy signal is printed. That same buy signal is reflected on the chart as a blue upward arrow. When the oscillator crosses under the signal line, a sell signal is printed. And on the chart, you can see it's a downward arrow. So not only does it print the buy and sell signals on the oscillator window, but it also prints them on the chart window. Now, next to every signal, there is a dotted line known as an invalidation level. A bullish invalidation level appears near buy signals, while a bearish invalidation level is going to appear near a sell signal. These invalidation levels are important because they can be used as stop loss placement levels. Now, whenever an invalidation level is touched by the price, an X label appears to show that the price went against the signal and effectively invalidated it. If you had taken any positions, that would also mean that any stop losses set just beyond the invalidation levels might have been triggered. So here's how the indicator works. The oscillator calculates price deviations from a mean value and then applies a 2-pole filtering to smooth out the signal. 2-pole filtering is a way to reduce noise while at the same time preserving important trends, effectively applying 2 layers of smoothing to produce a cleaner signal. Once the signals are generated, they are colored to show whether they're bullish or bearish. Bullish signals appear in blue, indicating bullish momentum, and purple signals appear when momentum is bearish. If we go back to the settings of the indicator and then head straight to the Style tab, we can disable the last plot option. And then on the Inputs tab, we have the filter length, which controls how much smoothing is applied to the oscillator. A higher filter results in smoother signals, reducing short-term noise, but it may introduce more lag. Conversely, a lower filter length makes the oscillator more responsive to price movements, but it may also produce more false signals due to increased sensitivity. Adjusting this setting allows traders to customize the balance between smoothness and responsiveness, depending on their trading style and market conditions. And then down here, we can toggle the levels on or off, which will hide or show these invalidation levels. For the strategy I'm going to be showcasing, I need the invalidation levels for stop loss placement, so I'm going to leave them enabled. Now, if you have any other changes that you want to make, you can feel free to do so. For me, I'm going to use the default settings. So click OK. Next, let's explore how we can use this indicator to trade by identifying overbought and oversold conditions. Looking at the indicator scale, we have a midpoint located at the 0 point on the indicator scale, additional levels at the plus 0.5 and the minus 0.5 levels, and then we have extreme levels at the positive 1 and the minus 1 levels on the indicator scale. A market is considered overbought if the oscillator goes above the 0.5 level. It can also be considered extremely overbought if the market goes above the plus 1 level, which offers higher probability of a pullback. Likewise, the market is oversold when the oscillator goes below the minus 0.5 level, and it's considered extremely oversold if it goes below the minus 1 level. For the strategy I'm going to be showcasing here, we need to add the Volumatic Variable Index Dynamic Average, also known as the VIDYA indicator. Once you've added it, you want to double click on it and then change the VIDYA length to 34, go to the Style tab and then disable the lines option and then click OK. This indicator is used to identify bullish and bearish trends in the market. A bullish trend is identified by a green trend ribbon like this. Conversely, a bearish trend is identified by a red trend ribbon like this. It also measures the trend strength using the delta volume, where a trend is considered strong enough if the delta volume is at least 20%. For example, to take a long trade, you basically want to have a buy signal printed within a strong bullish trend. Here you can see we have this dot, which represents a buy signal. This buy signal is only valid if it's printed under the 0.5 level, this gray line. If it's printed anywhere above that line, the entry would become invalid. Condition number 2. At the time the signal is printed, we need the VIDYA indicator to be colored green to indicate that the trend is bullish. We also need to check the delta volume, which should be at least 20% to confirm a strong trend. Right now we can see it's well above the 20% limit, which means this trend is strong enough to push the price higher and higher. Also keep in mind that the long signal from the 2-pole oscillator is going to be delayed by 2 candles. As you can see, the signal appears on this candle, but it doesn't show up until after these 2 candles had passed. So we're not going to enter the trade on the candle where the signal appears. Instead, we will be entering after the close of the second candle. We take a long position. The stop loss is going to go right under the invalidation level, which is actually this dotted line right here. The take profit is going to be set at 1.5 times the risk, letting the trade run. And as you can see, it was profitable. Now, here was another long position. As you can see, we had a buy signal, and it was valid because it was printed under the 0.5 level, the dotted gray line. Looking at the VIDYA indicator, it was green, indicating a bullish trend. At the same time, the delta volume was above 20%, confirming that the trend was strong enough to push the price higher and higher. We take a long position, place our stop loss below the invalidation level, and you want to aim for a take profit of 1.5 times the risk, letting the trade run, and it was profitable. Now, for a short position, it's going to be the opposite. Condition number 1 is to have a sell signal printed by the 2-pole oscillator. Here, the sell signal was valid because it was printed above the 0.5 level, the gray horizontal line. Looking at the VIDYA indicator, it was actually red, confirming that the trend was bearish. The delta volume was minus 29.22%, which is well below the minus 20 threshold, indicating a strong enough bearish trend. We take a short position, place our stop loss above the invalidation level, set the take profit at 1.5 times the risk, letting the trade run, and it was profitable. Ladies and gentlemen, this is the 2-pole oscillator, a powerful trading tool that helps identify momentum, trend strength, and trade signals with reduced noise. When combined with the VIDYA indicator, it creates high-probability trading strategy for capturing market trends more effectively. If you happen to find value in this video, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.